Okay, so let's understand the current problem. Okay, so to begin with, we will start with the accounting, the basic accounting equation, and then we will move to our main solution. Okay, so it's asset minus liabilities equals to equity. Okay, so let's say to understand this basic accounting equation, first of all, we need to understand that what does the accounting equation says. Okay, so let's say suppose uh, you are dealing in the business of selling video games. Okay, by selling the video games to the customers, you have generated the revenue of $1,000. Okay, $1,000. Why I have written $1,000 under the asset, I will tell you. So let's say suppose that you have sold the video games to your customers, but you are unable to receive the amount at the spot. Okay, your customer is likely to pay you off, let's say after 30 days of period. Okay, so whatever the amount that is receivable at a future point in time, that amount is known as asset. Okay, so even if you have sold the video games to the customers but still you have not been paid, that amount is recoverable from the customer, so that will be considered as your asset. Okay, let's say suppose in processing the material of video games, you need to purchase the material from someone else, like your supplier, so that you can process the video games into saleable product. Okay, so for that you have imported someone from the outside of the country. Okay, and you have imported material of $500. You have imported material of $500. Why I have written $500 under the head liabilities? Because a liability is an amount payable for the benefits that has been availed. Okay, like the or in simple terms we can say liability is an amount which is payable at a future point in at a future at a future point in later time. Okay, now what is the equity portion? $500. 1000 minus 500 equals to 500. Now what is this 500? You can completely interpret this through the equation that it's a takeaway from business after paying off all the liabilities. Okay, so let's say suppose if you have $1,000 of assets, you have $1,000 of assets, how and that are recoverable from the customers. But now what happened? You have also liabilities of 500 too. You have to pay them. So after netting the recoverable and payable amounts, you have $500 of equity. That that it's your personal amount that you will take away this amount at your home, because that is a lien free amount. Lien free means nobody has the right to detach that amount from yourself, because it is the takeaway from the business after paying off all the liabilities. Okay, so we have understood the basic part of the equation. Now let's move to our the main solution. Okay, so in the question we have been asked that what will be the effect on the both sides of the equation if a sales occurs. Okay, that is to a very simple part. I will tell you how. Okay, the question says that the sale event has been occurred. So let's say it is a cash sale. Okay. Now if there is a cash sale, okay, we have initial, I think we are not supposed to write it here. Okay, let's first just get the initial 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 amounts. Like we are into business of selling video games to our customers, so we have initial amounts. Do not confuse, I am just taking the amounts from this one and this one. Okay, $1,000 of assets that are recoverable, $500 of liabilities, $500 of equity. Okay, now you have understood the basic concept of accounting question. Now let's move to the solution. Okay, let's say suppose we have a cash sale of 500. Okay, now if I will sell the video game and against that I will receive cash, what will happen? My asset side will also increase because the asset also include the cash available with the business entity. Let's say suppose let's say suppose we have a company. Okay, but the asset side will also include the cash available in the business. Like we used to keep cash, hard cash in the cash drawers, or we can say our wallets, or some other type of stuff in which we can keep our cash. So there will be $500 sale. If we have made a sale of $500 in cash, then asset side will increase. There will be no liability. Why that so? Because we have, because for making this sale we have incurred no type of liability. Okay, we have, because I'm just supposing that, I'm just making this as an example to make the solution clear. Okay, so as we will sell the video game on cash basis, so we will realize the cash amount of 500, which will be included in the asset side as the cash balance. Okay, now on the opposite side of equation, what will happen? See, the motive for the business is to earn profit. And what is actually profit? Nothing. The profit is simple, everyone knows this. Okay, sales minus expenses. So if we will increase our sales, there will be increase in profits also. If we will increase our expenses, there will be decrease in profits. Okay, so likewise, if there is increase in sales, so the equity part, that will be your takeaway after paying off all the liabilities, will be greater. Why that so? Because you have made sales more than before. Okay, like you have made extra sales or you are making revenues, so your takeaway will be greater. It is very very obvious, right? So your 500 will be added here in your takeaway. Okay, so what is the net effect of the transaction? This will become 1500, this will be as it is 500, and this will be $1,000. Okay, so what is the net effect? What is the net effect on the both sides of equation? This we have as the initial level, this we have after considering the transaction. So you can see there is a $500 increase, there is also $500 increase. So the correct solution we can conclude for the problem 27 is A. Okay, so the correct choice Okay, so you can derive the solution by forming the basic count equation, because without forming the equation you will not reach anywhere. Okay, so that's all for the current solution. Thank you.